Hi there, welcome to Neppy Invest. Time for part 6 of my Appendix 4C video series. So in this video series, what I do is I look at 3 companies that released their Appendix 4C or quarterly cash flow report in January. So the 3 companies I'll be focusing on today are LiveTiles, Volpara, and MCS Security. Now, for full disclosure purposes, I am a shareholder of MCS Security, and I'll get into why I became a shareholder in the next slide. So MCS Security does have a sort of an interesting past. I've been following this company for about 5 years. So they were a backdoor listing. I think they did that in 2015 when backdoor listings were all the rage on the ASX. If you don't know anything about backdoor listing, what it means is simply you have a shell of a company, which means it's some sort of listing on the ASX which doesn't have any business. So I think they were an old mining exploring company. And what they do is they're looking for some sort of opportunity, some sort of company that wants to become a part of the ASX community, but doesn't want to go through the whole IPO process. So when the announcement that MCS Security was going to backdoor list into this shell, I became a little bit excited because I just saw the word security. And I thought, naturally enough, this was an internet security company, but it's not. MCS Security is all about providing physical security for retail shopping centers, sports stadiums, that sort of thing. So they provide the security guards. And you don't have to have any sort of imagination or know anything about the business, but immediately I knew that this was a very low margin sort of business and I did not want any part of it. And indeed, it is a very low margin business. You can just see that by the financials. So when I bought into this company, and the main reason, in fact, the whole reason I bought into MCS Security was around valuation. They had a market cap of about $3 million, maybe it was just less than $3 million. They had cash on hand of about $3 million. So enterprise value was almost zero, which means the market was attributing no value to the business as a whole. And you can see right now the market cap is now $11 million. Revenue for the last financial year was 25, and that is growing, and they were operational cash flow positive. They have been doing share buybacks, and at one point they actually did give a dividend to their shareholders. So there is that potential moving forward. That sort of thing can happen in the future. Now, I think the key for this business, the key for the management is to diversify into higher margin revenue streams. And they have been talking about that. They've also been talking about expanding their locations of business. So right now they're primarily in WA, but they do have licenses in the other states. So they have that opportunity to expand. They've also talked about acquisitions and mergers, which I think in this fragmented space that definitely can happen in the future. So there is potential for this company to grow, particularly if management moves towards those high margin revenue streams. So in the Appendix 4C, I'll go straight to Section 1, which is the cash flows from operating activities. So receipts from customers is the first line all the time, and that's $10 million. So MCS brought in $10 million from receipts from customers. But you can just go below that, look at staff costs. They were just about $8 million in staff costs. So a lot of their money they make from customers is going straight to labor costs, that sort of thing, straight to their security guards. And so what that means is they only were operational cash flow positive to the tune of $307,000. So even though they were just slightly above operational cash flow neutral, they still increasing their cash on hand. So they've increased that from 2.8 million to 3 million. So very important moving forward is see what management do with their increasing cash, whether it goes to acquisitions, dividends, share buybacks. That's very important moving forward. And I'm very keen to see what they do. I would like them to do it for growth purposes. So acquisitions, maybe getting into high margin revenue streams like maybe some security systems that don't rely on labor or security guards, that sort of thing. So I do like to look at the receipts history trend. I always like to see an upwards trend in the receipts history, and we definitely see that with MCS Security. In fact, it's been growing per quarter at 4%, and analyzed that's between about 15 and 20% per year. So it's actually good increase in receipts, but again, it is low margin, and again, I want to see that high margin revenue streams coming through in the next few years. Now let's go to the chart. So I'm going to look at the 6-month daily chart and then look at the 3-year weekly chart. Now, we did see a bit of a shift in sentiment and the beginning of an uptrend in October with the release of their quarterly cash flow report in that month. And that was towards the end of the month, just above 2 cents. And then share price has been going up ever since then. And right now it's around 6 cents. So it has tripled in price in just over 3 months. That's the sort of thing you want to see as a shareholder. And as a shareholder through this period, I have quite enjoyed it. But one thing that does concern me is the sort of small amount of volume on the bottom there. We did see the peak in volume in October, which was the impetus behind the share price rise. So someone was getting interested in MCS security. And I think at that point, it was the valuation around the company. When you look at the 3-year weekly chart, you can see there was a bit of a turnaround in the past, well, not in the past 3 or 4 months. Between about July and October, we did see a potential shift in sentiment then, and that shift in sentiment was confirmed in October, November when the share price zoomed past 3 cents or so, and that was a 3-year high in the share price. So right now at 6 cents, we're looking at a multi-year high in the share price. And I think, again, the important thing is what management do with the cash on hand and whether they can go to high margin revenue streams. I wonder how many times I can say that in this video. So the next company I want to look at is Volpara. Ticker code is VH2. This company provides personalized breast cancer screening. Now, the market is excited about this company. I do think it has potential, but maybe the market is looking at the potential and there is a bit of premium to the evaluation of Volpara. So last time I looked, the market cap was $397 million. And even though it's $397 million, they only have revenue of $14.7 million and an operational cash flow negative in the last financial year of $16 million. So they were burning $16 million of cash. So if you are excited about this company, I do recommend looking at some of their presentations, looking at their website, even going to their Appendix 4C that was released on the 28th of January to get some further information about this company. So let's get into their operational cash flow for the quarter. So this is a New Zealand-based company. So their numbers, financial numbers, are in New Zealand dollars. So receipts from customers in the last quarter, $4.6 million, and they were still burning a lot of cash, and cash flow negative for the quarter of $3.1 million. Now, in saying that, they have a lot of cash on hand. So they began the quarter with $64.3 million and finished it with $60.6. Now, they did do an acquisition recently in the last few weeks, and I think I could be completely wrong with this, but I think the acquisition was, they used cash for the acquisition, which makes sense since they have $60.6 million of cash. How management uses that cash on hand is very important. And if they do an acquisition, probably the most prudent thing is to use the cash on hand to do that acquisition. I do have one concern about this acquisition. And when you look at the receipts history here, it probably shows my concern. So over the last 6 quarters, receipts have gone sideways. Whether that is COVID-19 related remains to be seen. I think that could be playing a part here, particularly because they're doing breast cancer screening, and maybe breast cancer screening has gone backwards. It shouldn't have. Women should be still doing their breast cancer screening. So my one concern, this could be completely wrong, but my one concern is management have seen this flatline in cash receipts and are thinking they need to do some acquisitions to get the company growing again. And that's not a bad thing sometimes. Growing by acquisitions is not a bad thing, but it can be showing that the underlying business is flatlining. You can see since July 2016, they have grown at a 10.5% quarterly growth rate, but in the last 6 months, it has flatlined. In fact, it's gone backwards at 0.3% per quarter. Now, always like to look at charts for any company because charts show you, particularly in the short to medium term, what sentiment is like for a company. Now, for Volpara, in the last few months, sentiment has been quite positive. We saw that shift in sentiment around late December when the share price was $1.37. We saw a little bit of volume, not a lot of volume come in, and then they saw the share price just kept going up for a few months. Got to a share price high of about $1.70 just after the acquisition, if I remember correctly. And then in the last few weeks, we have seen the share price pull back from $1.70 to a low of $1.45. There was a potential buy of $1.55. That was a good resistance level because that was the previous high way back in October. And I thought that could have been a good time to buy if it held $1.55 held. It didn't. So anyway, I'm keeping an eye on Volpara to see what the share price does over the next few weeks because it's pulled back to a range where I think it could go either way at this point. The other thing I do like to look at is a weekly chart. So what I've got here is a 3-year weekly chart. And in this chart, I'm just going to be focusing on the last about 8 or 9 months since about April 2020. So between April 2020 and the beginning of 2021, the share price of Volpara was going sideways. There wasn't much trend at all, and there was no point buying at that point in time because there was no sentiment, no trend. Now, since the beginning of 2021, we have seen a potential shift in sentiment. And when I'm talking about sentiment, I'm not talking about short-term sentiment. I'm talking about the longer-term sentiment. And that could lead to the beginning of a long-term upward trend in the share price. Now, we can see since April 2020, the share price did not get above $1.60, and recently it did. And then as soon as the share price got above $1.60, it pulled back towards $1.50. And if the share price of Volpara gets above $1.60 and stays there, we could be seeing the long-term share price in an uptrend, and that would be quite bullish. Now, the last company I want to look at is LiveTiles. So a lot of potential in this company moving forward, particularly when you look at the space they're in and when you compare the market cap to their annual recurring revenue, there is some value there potentially. Now, when you look at their last financial year numbers, revenue of $38 million, but they were operational cash flow negative to the tune of $9 million, which suggests that the management loves to spend money. Now, they could be spending money to grow the company too. They're looking at the future, that sort of thing. But their annual recurring revenue has sort of petered out recently. So that is a one slight concern that the annual recurring revenue isn't growing quite as strongly as it has in the past, but they're still bleeding a lot of cash in their day-to-day running of the business. Now, this is the operating cash flow for the quarter. Now, a couple of interesting things here. So receipts from customers worth $13.9 million. So that's quite high, but they did lose $13.6 million in their operational cash flow. Now, just go above that, there were a couple of reasons why that number is so high. They did have 2 non-recurring fees or costs, and that was legal fees and staff costs, and that was around $10.8 million. So if you take away that $10.8 million, which is non-recurring, so it's not going to happen next quarter, they only burn cash to the tune of, say, around about $2.6 million. So it's not that bad. Now, because of those non-recurring fees, they began the quarter with $34.6 million of cash and finished it with $19.2 million. So there is that slight concern. They did bleed a lot of cash this quarter, but their cash burn is not quite as bad as it seems here. And with the fact they have $19.2 million of cash on hand, there's still a lot of cash for funding operations for the next few quarters. Now, annual recurring revenue for the quarter was $58.1 million, and it's only 10% growth year on year from the previous year. So I'd like to see that a little bit higher than it is now. But still, when you compare the market cap, which is in the 200 millions, to annual recurring revenue, which is 58.1 million, there is some value there with LiveTiles. Again, I like to see an increasing cash receipts trend. We definitely see it with LiveTiles that it is that increasing trend. But I have put an exponential curve there, and they were growing their cash receipts at an exponential rate up until April 2020. So maybe COVID-19 has had an effect on their growth in receipts. That is potential. But they were exponentially growing their cash receipts up until April 2020. You can see the compound quarterly growth rates since October 2015 is 20.5, and you can see that growth rates in their receipts has been slowing down, 15.5% over the last 2 years and only 5.7% over the past year. So I'd like to see that growth rates going back up or increasing again before I get excited about LiveTiles. Now, a few days ago, LiveTiles released an announcement to the market about a contract with a Fortune 100 company. The market got excited. We saw the share price rise from about 25 cents to 29 cents on increased volume. Then LiveTiles went into a trading halt because they had to clarify some information around that contract. And last time I looked, they just released the information in regards to that contract as I was just about to do this video. So I'm not sure how the market has reacted to that clarification. So anyway, when you look at the 6-month daily chart of LiveTiles, you can see a lot of volatility, a lot of up and downs, a lot of wave action to the share price, and that's just the day-to-day sentiment swings in the company. That's all it is. And you can see the share price goes as high as 30 cents in November and then pulled back all the way to 20 cents in January. So that's a 33% drop in the share price, all based off short-term sentiment. So I like to weed out that short-term sentiment, and when I weed out the short-term sentiment, I look at weekly charts. So when you weed out the short-term noise and look at a weekly chart, so what I've got here is the 5-year weekly chart. So you can see when the market got excited about the long-term potential of a company just by looking at the weekly chart. And definitely in 2018, the market was really excited about the long-term potential of LiveTiles. Now, in recent times, the market's become less excited. I think the main reason it's become less excited is around the fact that LiveTiles has had trouble becoming operational cash flow positive. Now, I think that's the future of this company. The market will become excited about LiveTiles or CAM when it becomes operational cash flow negative. You can see over the last 7 months or so, the share price has traded between 20 cents and 30 cents. So I think if the share price got above 30 cents, that would be very bullish. If the share price got above 30 cents and the company had become operational cash flow positive, that would be ultra bullish. So that's what I'm looking for right now. Share price to get above 30 cents and LiveTiles becoming operational cash flow positive. I think if those two things happen, the market will become again positive about the long-term potential around this company. That's all I got for this video with this Appendix 4C Part 6. If you've got any questions about Volpara, LiveTiles, MCS Security, leave it in the comment section. Otherwise, I'm not a financial advisor, so if you do need to seek any financial advice, make sure to seek out someone who is qualified and speak to your own financial needs. That's all for this video. Have a good day. Bye.